to give you some context about the meetings that are coming up, and to do that I'll talk generally about the bigger picture that we're seeing and then hand over to Dr Hew to talk about the economic trends. We're seeing APEC economies operating at a time when there have been some quite significant influences through the region, and I guess the two big ones that we've all seen since the global financial crisis has been the big monetary stimulus and quantitative easing that's impacted the region from several sources, and the slowdown in trade, particularly out of Europe, but also felt somewhat in the region. And that has meant that the area has grown a little slower than it has before, but is still showing reasonable sort of growth, and Dr Hew will talk about that. We're also now entering a period where we're seeing some tightening of monetary stimulus, and the bigger picture out of that is that basically the price of capital is heading back from very low levels to new normal levels, and that will impact economies in the region, and it already has been through some of the market indicators. At the same time, trade flows related to Europe have slowed down, and as the Chinese economy has slowed a little, that's impacted the region as well. Now, these impacts of slower trade growth and new forms of growth model in the region are a real focus for ministers and leaders in the APEC region. In APEC, we focus not so much on the short-term financial market implications of all of this. We're all the time looking at medium-term and longer-term structural issues and trying still to focus on that path of growth for better living standards around the APEC region. So the way that's going to be addressed in the upcoming meetings will be with a focus on something which of course has been a mainstream Indonesian originated interest for a long time through APEC, and that is the Bogor goals, almost 20 years since they were first signed, and leaders and ministers will be reviewing progress on those. There's been some concern through the global financial crisis that we could have seen a resurgence of trade protection. We haven't generally seen that, but we have seen a slowdown in prospects for the Doha round due to meet here and report later in the year. And in addition, you can expect ministers and leaders to express some views about how they would like that to proceed. In addition, last year in Vladivostok, leaders agreed to a new environmental goods list for advanced liberalisation, and there's been a lot of discussion about that and how that might proceed as well. As emerging economies are looking at new growth prospects, they are realising that this hasn't been a couple of years so much of trade-driven growth. It's been a period when there's been more domestic demand and more investment in infrastructure. And this theme of infrastructure and connectivity, as it's been framed by the Indonesian hosts, will attract a lot of attention and a lot of discussion. Already 10 days ago, we had here the Ministers of Finance meeting and agreeing some particular developments and policy moves in the area of financing and funding infrastructure growth. We expect to see ministers and leaders focus in on connectivity, on infrastructure, on people movements, and on institutions coming together across the region as well with all of that. In addition, there will be some work on particular aspects of opening up borders and practical issues at the border frontiers. The third big theme is one which all ministers and leaders will focus on. That is on growth, because of course growth has been challenged a little bit in the region over the last little while. But here the challenge is partly to move from simply high growth to what the hosts have called sustainable growth and growth with equity, so that it's broadly felt throughout the region. Here there are a number of initiatives and projects that have been going on to try and address that. At this point, I'd like to hand over to Dr Hew to talk about economic trends.
What I'd like to focus on for the next 5 to 7 minutes is on our latest issue of the APEC Economic Trends report, which will be available on the APEC website, I believe sometime today. In terms of the report itself, perhaps if just a brief introduction of what this report is about. We're not in the business of forecasting, but what we try to do is to take the most latest economic data as well as forecast estimates from respected sources, the IMF, consensus forecasts, and others, and try to glean some of the emerging trends over the next 1 to 2 years within the APEC region. So, based on our analysis, certainly for the first half of this year, we're seeing a mix of different growth dynamics between the industrialized APEC economies and the developing economies. On the whole, we see that there's been a general slowdown from last year. Much of that is attributable to slower global trade growth. We see that global trade growth for the first half of this year on an annualized basis is about 2%, which is pretty much the same as last year. And that contrasts, of course, very significantly from the last 7 years. From 2000 to 2007, global trade growth was about 7%. And much of that can be explained, of course, by the global contraction in import demand from advanced economies. As you know, many of the advanced economies, particularly in the euro area, are still going through a fairly protracted slowdown. In terms of merchandise goods as well, we see shipments of APEC goods to the euro area also still not yet recovered. And then, of course, if all of you are following the financial news, there's also been some level of financial markets volatility, particularly during May and June, partly due to earlier concerns that, or earlier news that of a tapering of QE3 in the US. Of course, there was clarification later in September that that was not going to happen, and we see a recovery in many of the financial markets and stock markets in both in this region and also in the US. If you look at the more industrialized economies in APEC, we see quite a bit of a different story. We see turnaround in terms of economic recovery, particularly in the US. We see for the second quarter of this year growth of an annualized basis of 2.5%, which is much better than expected. And we also see in Japan its new what we call the three-prong economic strategy in Japan, better known as Abenomics, beginning to take effect, both in terms of fiscal and monetary stimulus, and the third pillar, of course, which is still ongoing, is on its structural reforms and growth strategy. So in Japan, we see that growth has picked up from about, for the first quarter, it was 4%, and for the second quarter, it's still a pretty buoyant 3.7%. So looking ahead for the second half of this year, we see a modest but cautious recovery in the region. We see that in the U.S. economy, a fairly significant news of improvements both in private consumption. We also see improvements in the housing market. And of course, as mentioned, Japan is also, there's been a significant boost in business confidence and investors' confidence thanks to the implementation of Abenomics. In Japan, we also see some proactive fiscal stimulus measures, particularly in such as tax incentives and waivers on value-added tax for small medium enterprises, which might provide a boost for private investments. And of course, many economies are, as Dr. Bollard has talked about, there's been a lot of focus on infrastructure development, and many of the APEC economies are beginning to strengthen much of its infrastructure spending as one form of boosting economic growth looking ahead. So all in all, based on the forecast, we see that the APEC region continues to still outperform the rest of the world. The IMF recent forecast for world GDP growth is 3.1% in 2013 this year and 3.8% next year, whereas the APEC region expected to do a bit better at 3.9% in 2013 and accelerating to 4.4% in 2014. Having said that, of course, there continues to be some risks that, particularly some downside risks to the economic outlook moving ahead. Of course, as we know, the euro area continues to be in an economic slowdown. There's also concerns, as I think, again, if many of you follow the news, the impact of the political crisis in Italy may have impacts on overall economy. There's also concerns also in some of the other Eurozone economies. So the recovery process in the Eurozone continues to be fairly protracted. Some of the other concerns and perhaps obstacles to economic recovery continues to be also related to some concerns of a rise in international lending rates. If eventually the U.S. economy does, particularly when there's improvements and clear signs of economic recovery in the U.S., the U.S. Fed will certainly begin tapering of QE3. And of course that would lead to perhaps some concerns of some financial markets instability, and that's something that perhaps will be of concern to the overall economic recovery. The other, of course, concern, of course, is that of a possible translation of international lending rates to domestic lending rates, and raising the cost of business as well as interest rates may have some impact on private consumption as well as investment. Hence, it is important for the APEC region, and particularly for governments, to undertake the necessary policy responses if such a scenario does occur. On the whole, what can APEC do? I mean, we're seeing an overall region of cautious but gradual economic recovery, but there's still a lot of work that APEC can do to try to boost the investment climate. As you know, there's a major initiative in APEC called the Ease of Doing Business, where there's a target of improving the ease of doing business by 2015 by 25%. There's a fair amount of work that's currently being done by the Economic Committee within APEC to see how those targets can be achieved. And as Dr. Bollard talked about, this year there is a focus on both infrastructure development as well as connectivity. And there will be a fair number of initiatives that will be taken place to strengthen connectivity, and of course that would improve regional economic integration and to provide sustainable economic growth and development in the region going ahead.